Morning, this is Anka Metcalf with TradeOutLoud.com. Welcome to my pre-market game plan for the major futures, indices, gold, and oil for today, Tuesday, August 15th. It is 8:50 a.m. Eastern Time, so let's begin with the mini Dow Industrial Average. Yesterday, we had a rather choppy day. We did have a breakout. We've captured about 15 points from this breakout, and then it just hovered for the rest of the day. In the last 2 hours, decided to correct back into an area of minor support from pre-market resistance area 21,950, from which after the open at 6 o'clock Eastern Time, it decided to test the prior high. Also a very solid area of resistance from these prior highs from last week, from last Thursday's trading activity. Also, we did have this flat 200 moving average here that was creating a lot of issues for this index and for the majority of indices, because we did have a little bit of a sell in these indices last week based on fears with North Korea. So now we're getting a push, technical push higher above these prior highs that occurred in the very early hours of the Asian session. So you can see very well here that we've opened right here at 6 p.m. Eastern Time. We've challenged within an hour, we've challenged these prior high, erasing these prior highs and igniting all the way into this area of resistance. Actually, the resistance was at 22,022, burst up into the 35.36 area, corrected, forming an hourly sell, triggering below 22,020, correcting, you've guessed it, into this area, this resistance area, projected support for the price moving forward, and rotated back to the upside into the exact sell area right here at 22,020. Now, this is going to be a decision point, because if today we're going to break above 22,020, we do have odds to continue higher. And I have here the daily chart to show you how high we can go. Well, first off, we're going to go into this cluster here at 22,070, probably 22,080, retest this prior high, and then flurry back up, going for that all-time high that was created last week, 22,132, just before the sell-off started. So these are going to be the targets for today. So what is the game plan if we are going to, if we're not going to break above the 22,020? Well, here's the thing. We have a difficult area here, because from this chart, you can see that we are having, when we're trading into a very solid uptrend, that is determined by these prior higher highs and higher lows. You can see very well that the price is above the 200, the price is above the 20, and piercing the 10 exponential moving average, which makes it bullish moving forward. And this is the reason why when we're trading, we need to stick with strong indices or strong markets, because they have higher odds of continuing higher. All right, so let's not try to short aggressively right here. So the short here would come on a test of 21,974, 975. This is going to be the test area. Keep in mind that any bounce right into this area will be seen as buyable. So not necessarily we will look for a short in this area. We will look for a retest into this area for a possible continuation higher, because keep in mind, we've had a very solid rally throughout the Asian session. We've had a very solid rally right here on Sunday, continuation on Monday. So we do have some sort of symmetry. And it's really usual that after we get these extensive moves to the upside in one trading session, usually the other trading session or trading sessions, in this case, the London and the New York, are going to take a breather, because the market needs a breather. Think about horses at the racetrack. They run, but at certain points they need to catch their breath. Same things here. Bull have rallied in this extended session time, and now they need to take a breather. And this is very typical for the market. All right, let's continue with the mini S&P 500 and the E-mini S&P 500. It has pretty much a similar pattern with the E-mini Dow Industrial Average, in terms that It did have the overnight rally, hit a resistance at 24.74. The support area that was developed in the overnight trading session remains 24.65. The New York trading session yesterday, New York trading session support is at 24.61. And we're having the same elements here. Possible continuation higher, yes, of course, into the 24.74 area, and also into this cluster of resistance right here that the market has been ranging for a very long time, more than 2 weeks. So that is the 24.80 area before we had the flurry all the way into this high of 88. So right now we're trying to decide whether we're going to attempt to go to this 24.80 area or possible turnaround. But guess what, guys? If we're going to possibly turn around in this area, rotate in this area, you know what this is going to mean for the market, and especially on a higher time frame right here, not from the hourly, because the hourly looks very, very, very bullish at this point. But on the daily, if we're going to trade below the 24.62 area, this is going to be a big bear sign in terms that we have a high, we have a lower high, and therefore this is going to be the secondary high. We also have this low right here. We have a lower low right here. So this is going to be the formula for a descending pattern that can possibly go back into correction into the 24.50 area, 24.30 area. So we're going to monitor this very, very closely. Support from the overnight trading session 24.64, as I was mentioning earlier. Resistance into the 24.73 area. The line in the sand is going to be the 24.71 area. If we break above the 24.71 area, we're going to head higher. If we break below this 24.64 area, not quite bearish yet. I'm going to wait, sit on the sidelines, sidelines and wait for a correction into the 61. Possibly correction into the 64 and 61 may be seen as viable for a continuation higher, because like I said, the catalyst is going to be all the way into the 62 area. And remember, this is the area right here that the past few weeks, all these areas were bought. All right, so keep that in mind. All these areas were bought here, so not necessarily that we're going to be looking bearish at this. All right, let's continue with the mini Nasdaq. Nasdaq has had a powerful rally. So yesterday was the best one that rallied. We talked about this and in the pre-market game plan before the market opened, and we were looking at a breakout over 58.80. Some of you got this breakout, and congratulations. Some of you have emailed me and said that you've got this breakout and you are very happy, and that you locked in at 5,900 area that we talked about also in the pre-market game plan. Now, keep in mind, these pre-market game plans are very significant, because I could tell you elements that I'm looking at, support resistance levels, key areas for the market from an hourly perspective that you can apply on the 1 and the 2 minute chart and really get in very good moves before the market opens and before you receive any signal service. So keep in mind, watch these pre-market videos and use them as your own signal service, right? Because if we get a range like this at 9 o'clock Eastern time, you could see that this triggered at 9 o'clock. So we did deliver the pre-market game plan before 9 o'clock, very close to 9 o'clock. So you were able to act on this at 58.80 area. So you can see it very well right here that we had this initial breakout. Once again, the issue with the Nasdaq was that it had a wide stop here. It had a wide range, so you had to give it a stop below 58.63. This has been the issue, and that is continuing for the last month. I would say for the last month and a half or so we have been having really wide risk in Nasdaq. Also, after we had the initial move up, remember and keep in mind that in the summer, with the summer trading, you need to apply double the stop and half the risk. So what do I mean by that? So if you're used to risking $250 on a trade, you need to position size for 250 and give a wider stop. Give a flex stop, give a soft stop. We've been talking about this. You have the definition into our guidelines. So look that up as well, because we might get we might get wiggled out of these trades very, very often, especially during the August and beginning of September. All right, so we had a rally up, overnight support, 59.16 area, a resistance. We have 59.30 area. All this high is at 59.45, which represents resistance. We're also running into this cluster right here, as you can see, and this has been an area that we have been basing pretty much in July for a long period of time before we actually moved up to this 59.95 area. And also this can be a rotation point, so keep that in mind. So a breach of 59.16 area can bring more selling all the way into this into this area right here of 5900, and then all the way into this area of 58.90. This could also be a possible turnaround area. Keep it in mind, 5900 here comes into this congestion. It just literally crosses through this congestion right here. So you can see that the 5900 area has been in play for the last 2 to 3 weeks as price was meandering above and below this catalyst right here. So this is a big number right here, guys. It represents a lot of resistance and support as well on the daily chart. You can see it right here. It's a threshold, so it was up and down, up and down. So this is a very tough area right here. We need to trade above 5900 in order to remain bullish for the day. So for the open, we will be looking for breakouts over 5930.50 area, and as long as the support level holds here at 5915, these are going to be the parameters. Continuation higher into the 5940 area, 5950 area, and possible continuation higher into the 5970. And these are the resistance areas that are going to represent target areas moving forward. And obviously this 6,000 level. All right, let's continue with gold and see how gold is shaping up for the open. Gold is correcting, and at this point it is breaching this area of support right here that is created from this prior high. This resistance should have created a shelf of support for price continuing higher, yet no rotation at this point happening. Full correction in progress. Most possibly that will happen into the 1270, 1268 area. You can see it here, flurry to the downside. No more safe haven for gold at this point. 1270 for the next support area, because it is so extended. It's not going to be really closely on my watch list in the first 30 minutes of the day because we've had continuous selling for the last 4 to 5 hours. So possible turnaround here at 70. So this is going to be on monitor. This is typical double top right here. You can see the sell-off off the double top for those of you that trade this strategy. And once again, the gold is something that has been in play on major time frames. And I'm talking about the daily and the hourly time frames. So not day trading time frames. So these are more, and to be very honest, this was more, not even a swing trade, but a more of a core trading scenario. That means that you're willing to hold positions for a longer period of time. So months, maybe more than that. All right, so let's take a look at CL. And this is oil for the day. As you can see here, oil had a breakdown below $48.50. We talked about this and possible correction into the $47. Once again, very sloppy trading in oil lately. For the last 2 months or so, we haven't had a lot of trades. Keep it in mind, we have the AIA numbers today, 4:30 p.m. Eastern time. No trading around that area because it is very risky. I usually take some trades ahead of the news, and that is like 1 to 2 minutes ahead of the news. But right now the ranges are so wide, increased risk. So we have to weigh very well our opportunities and our risk to reward ratios before any kind of trade release. So keep it in mind, $47 is a lot of support for price at this point. We do have these 2 prior pivots right here at $47 that can create a lot of support for price price continuing higher. A break over $48. This is what I'm going to be watching for, and this is for possible trade throughout the day today or after the numbers come out. So keep that number in mind. Put an alert on it and look at it. If it breaks $48, we might see a reversal back to the $49. So here's what I'm looking at. $48 is the catalyst. It may come early right here at $47.80. Keep in mind, if you decide to take it at $47.80, not a great idea because we do have this resistance right here. So I think that this move may continue higher. If it's not going to hold this area, it may still continue lower into the 46 area. Keep in mind, we have been bearish all the time at the $50 because if we would have broke technically the $50 mark, we would have seen, and obviously we looked at the 50-50 area for a possible continuation higher, but as long as the price touched briefly above this area, not even hovering above the 50.50 area, we were bearish at this overall scenario, coming back into the $47. And again, this is a very very hefty area from these prior highs. So technically, if this $47 is not going to hold, possible sell that is already in progress may continue all the way into this 46.50 area and possibly correction into the 45.60 area as well. All right, so keep in mind that we do have resistance right here at 47.78. We also have these prior lows right here at this support area that is now going to be catalyst at the $48 area as an area of resistance. Turn around or break out at this point. All right, this is all for now. Thanks so much for tuning in, and I'll see you for more trading ideas in our private Twitter feed. We look forward to seeing you. Visit our website, tradeoutloud.com/trade alerts.